Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as is widely expected, the US Federal Reserve kept rates on hold. However, in the statement did signal that they will begin lifting interest rates in March, given the remarkable recovery in jobs. Looking at the dollar index, the market surged to a high around 96.5, which has put heavy pressure on the euro since taking out the short-term trend support. In light of the pattern, the call is still very much down towards the broader target of 111 figure 50, where the oscillators are still supporting this bearish case. Any advancements should be limited. The Australian dollar still remains focused on that support level around 70.90 after a bit of a knee-jerk reaction overnight, and also since the last couple of days' weakness is that the market may take this level out. If seen, would it expose the broader pattern that I'm looking for, which is roughly around 68.5 to 69 cents. Although the weeklies we would need to wait for confirmation by the end of this week, the fact is that the technicals are still holding to a negative bias and therefore supports at least one or two more challenges on this downside. And if we do see a break of 70.90, should expose the next target, which is seen roughly, as I mentioned, around 68.5 to 69 cents. Well, as I felt, the market took the break to the upside for dollar yen, re-challenged the trend break, and now stages a significant rally, and now looking back towards 115 as a potential target. I wasn't going to get too short down to this bottom side of the range due to the break, and also given to the fact that the technicals were firming up slightly. And now from this very strong candle coming through overnight, does support the view up to around 115 and reassess. As you can see, sterling is still struggling to rebound, although it is respecting this level, coming in around 134.40 area. In light of the pattern, we are somewhat oversold. I'm not going to get bearish down at this region. I feel the market may actually stage a rebound and therefore look back towards a 135 to 136 region. The KGN story, very whipsawed, and since the rejection from that 89.40.60 target and respected, and looking now possibly for a rise back to that top side of the range, which is somewhere around 91.5 and reassess. Well, due to the dollar index rallying very hard, the price for gold has dropped quite dramatically. And from the fall from around 1,849 is now sitting on the lows around 1,819 with an intraday low of 14. In light of the recent up test, I was never bullish above this level of 31, but the market did have to try and test out the top side, of course, and with a bull trap in place, now puts the target back towards 1,800 with the base holding at 1,788. Wrapping up with oil, well, the market's back at that 7-year highs, around $87 a barrel. I am keeping to a broader target of 88 to 90 with a base seen at 81. Inside there is just noise, so I don't really want to get caught up in that side of the range. But I would look at the levels around $81 a barrel, and as I mentioned, to the top side of 88.90 to maybe even put a position on if the indicators are set up correctly. But of course, it all depends to your risk management in how you trade. Nevertheless, the market is poised for a further test up, and let's see how strong the level can hold around that 88.90. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report and also end of the day wrap.